Thank you for tuning in. I am your host, Joseph Martin. Hit that like and subscribe button to support the channel and hit that bell icon to receive notifications. All right, guys, we are 4 videos into this series about whole life insurance. And if you haven't done so, I would highly recommend that you watch the first 4 videos before diving into this one. I'll put links up on the screen and down in the description. Now, before we go any further, this is not financial advice. Read the disclaimer in the description. Let's get to it. Most employers offer or provide life insurance for their employees, which is a good thing, but it's a good thing compared to what? The answer should come as no surprise to you. It's only a good thing compared to not having life insurance at all. If you've been following along and getting a better understanding from what we've covered so far, you should know by now that all life insurance products are not created equal, which brings us to lesson number 1, group life insurance. One of the most common mistakes that the average person makes when it comes to life insurance is not knowing the differences. If someone brings up the topic of life insurance, they quickly dismiss it as something they don't need because they have life insurance through their job. Group life insurance is something that most companies offer with their healthcare and other employee benefits. If you've been following along in this series, then there are a few questions you should already be asking. Who's the owner of the policy? And where are my dividends and living benefits? Before we answer those 3 questions, I want you to understand that group life insurance should be a backup or an addition to having life insurance on yourself. And the first reason for this is that usually when your employment with the company ends, so does that group life insurance policy. Now, we can answer the question of who the owner of this type of policy is. It's not you. It's your employer, which explains why when you leave, it usually stays with the employer. If you owned it, you could take it with you, no questions asked. Where are your dividends? This should be a silly question to you now, knowing that you don't even own the policy. This also highlights the fact that owners can only take out the living benefit of cash value as a loan from a life insurance policy. Here's the biggest drawback of having group life insurance as your only coverage. If you become disabled or hospitalized and pass away from it after losing your job for any reason, including that disability or hospitalization, you can lose your group life insurance and pass away without coverage. On the other hand, if you own a whole life insurance policy on yourself, it doesn't matter if you're in the hospital. It doesn't matter if you lose your job. As long as the policy is enforced, meaning active, your family is protected. Lesson number 2, human life value. In a group life insurance policy, the death benefit is usually maxed out at 2 times the insured's salary. So if they earn $40,000 a year, the death benefit would be capped at $80,000. But with a whole life policy, insurance companies consider what's called human life value. In the previous video, we discussed the mortality table, which uses statistics to calculate risk. This HLV table is used to calculate the maximum coverage or death benefit someone would need based on their age and income. Here's a standard example of that table. As we can see by looking at the table, the multiplier declines as the insured ages. One reason for this is that income usually increases as someone ages and gains more skills and experience. But the main idea is that as someone ages, they have fewer years left to earn, which is fewer earning years to protect. So someone in their 30s who earns $40,000 a year could get up to $1.2 million in coverage, which is 1,400% higher than the cap of the $80,000 they would get with group life insurance. Their loved ones would ultimately receive $1.12 million more from having a whole life insurance policy compared to just having the group life insurance. And if the group life insurance pays out a death benefit, they would get that $80,000 as well. Lesson number 3, AD&D Insurance, accidental death and dismemberment. When shopping for insurance, you need to keep in mind that a company offering insurance is a business. But an insurance company is in the business of making money. The lower the chances of an insurance company having to pay out a claim, the greater the chance that the company profits more from the policy than the owner, insured, or beneficiary. AD&D is a type of coverage that only pays a claim if the insured loses a limb, such as an arm or a leg or certain bodily functions, or if the insured passes away in a very specific way. Some examples of a qualifying event include, but are not limited to, travel accidents while using some type of transportation to and from the destination, like a fatal crash on a plane, train, etc. Falls, if that fall is the sole cause of death. Drowning in a pool, lake, etc., not a bathtub or jacuzzi. Equipment malfunctions, like an explosion at a construction site. Dismemberment, losing a hand, foot, or sight in one or both eyes usually pays a percentage, like 50% that they would pay for one limb. Here's a fun fact. They offer this type of insurance to people who have desk jobs. What's the chance of losing a limb at a desk? These conditions make the chance of paying out a claim extremely low compared to 100% guaranteed whole life insurance policy. Because these conditions are so specific, it all comes down to what the coroner puts on the death certificate as the primary cause of death, which could be the difference between having an event that qualifies and having one that doesn't. Unlike whole life insurance, where the qualifying event is the insured passing away. The cause of death doesn't matter. Having a death certificate is enough. Which brings us to lesson number 4, the suicide clause. Even if you have a whole life policy, the cause of death does potentially become an issue and prevent a death benefit from being paid if the insured takes their own life. If this happens during the contestability period that we explained in earlier lessons, the premiums paid will be returned to the beneficiary. For AD&D insurance, if the insured took their own life, this would definitely not be a qualifying event and a death benefit will not be paid and no premiums would be returned. But with a whole life policy, after the contestability period of 24 months ends, even if the insured takes their own life, the death benefit will be paid. Lesson number 5, term life insurance. I think now is a great time to discuss some pros of having term life insurance when you compare it to group life and AD&D insurance. Make no mistake, whole life insurance is the superior product when compared to term life insurance. If someone wants life insurance that they own, doesn't matter if they're in the hospital, doesn't matter if they lose their job, as long as the policy is active, their family is protected, and it costs less than a whole life policy with the same death benefit, then term life insurance is the way to go. And here's what that would look like. The comparison. Group life, cheap, but you don't own it. AD&D, cheap, but it probably won't pay. Term life, cheap, you own it, and it pays for any cause of death after the 2-year window. Remember that term life insurance is temporary. Regardless of how long it lasts, it has the potential to expire before the insured, which means the insured would pass away without any life insurance coverage if they don't have anything else in place. Here's an updated visual when we add in whole life insurance. Group and accidental death and dismemberment, no control and high risk. Term, control, low cost, high risk of expiring. Whole life, control, permanent, and certainty. You already know. I hope that you learned something, and I hope that you earned something. Hit that like button and put your thoughts down in the comments. Let me know what you guys think. Make sure you check out my other two channels, Original Greatness Shorts and Original Greatness Uncut. Make sure you stay tuned for part 6 on whole life insurance and check out this next video. Take care and God bless.